Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about precious metals, gold, silver, maybe some platinum. And we're going to talk about the TYX TNX ratio. That's the 30-year yield versus the 10-year yield, and how this thing moves and how it correlates to gold. It's basically the uninversion of the yield curve. So the yield curve inverts, and then it comes down. Under that market condition, generally precious metals do very well. It's the fear trade, so to speak. And when fear enters the market, or when people position a certain way, it changes the market conditions and what assets are favored versus other assets. Right now, we're seeing a breakout. I've talked about this before, weeks, months ago, about this ratio being very low. And generally, it's a good time to be looking at precious metals. It's broken that downtrend. It's starting to come back up. And that's generally when precious metals take off. So let's take a look at it. And let's look at the market conditions. Let's look at the alignment and the potential outperformance of gold and silver mining companies. Someone asked me during a platinum question answer call. They said, "How do I make a lot of money faster?" And the way I'll say that is, you're going to have to wait for these alignments to occur. We had an alignment occur in oil at the bottom of 2020. And for basically the most part of the year of 2020. That alignment and knowing what to do when that alignment happens is how you make a lot of money. And you're going to have to overweight those sectors when the alignment occurs. And in case of the oil alignment, I'll just go over it real quick. What we had is we had a fall. We had the yield curve drop. We had a lot of fear in the market. And that fear pushed everything way, way, way down to very cheap levels. So what we saw oil equities very cheap against oil, and we saw oil very cheap against gold. We're talking anomaly level cheap. Generally speaking, a very cheap level of a gold to oil ratio is 1 ounce gold, 30 barrels of oil. We got to levels over 100. So that does not happen hardly at all in the markets. And when they printed the money, that also led to inflation. That inflation set the market conditions for all this to unwind. And the first leg of oil, and the oil equities especially, outperformed dramatically to the upside. 10 baggers, 20 baggers, 30 baggers, 40 baggers, depending on what you were in. And they did that in 2 years. That is what I call vast outperformance. We have another alignment that's occurring in the gold and silver mining companies right now. That alignment is the TYX TNX ratio. It's the inversion of the curve first, and then the uninversion of the curve. That uninversion favors different assets than what came before it. So when the curve inverts, it's very inflationary. When it uninverts and comes and rolls back over, it favors gold and precious metals. We want the alignment where the gold and silver mining companies are cheap in relationship to gold. And we want the right market conditions to come for the assets and the money flows to flow differently and move into this sector. I think that is occurring now, or it's about to occur in the gold and silver mining companies. It's happening now in the precious metals, gold specifically. So let's take a look. I'll give you my financial opinions around this. I've got specific companies, if you guys are interested, on the website, finding-value.com. That's where I'm talking the small little guys. Now, it's important to get the right companies. It's important to know the fractals. The fractals are the big moves that occurred in the first wave. And then we have the pullback. And then I think big wave is coming. So let's look at the data first and kind of get our bearings on where we're at. So when I talk about this TYX TNX ratio, it's the 30-year divided by the 10-year. The 30-year is more stable, and the 10-year is has more movement to it. The short end of the curve has a lot more movement than the long end. And what we do is we can chart these in ratios, and we can see the behavior of this ratio in relationship to other assets. One of those behaviors that correlates very well is gold and TYX TNX. You can see that we went from a low ratio up, gold went up with it. We saw that it goes down, and then it goes up, right? So when the market condition changes and the yield curve either inverts or uninverts, it has an impact on the pricing of assets. And right now, with the setup, and if we kind of zoom in here, we're at a very low level for this ratio, which is favorable for precious metals. We have a downtrend line that's broken in the ratio, and it looks like we are about to head higher in that ratio. So what that is telling me is that we could see gold go higher. And we've seen gold start to take off from 1650 all the way up to where we are today. If I throw a nice, easy trend line in here and just go off the tops here, we have broken out to the upside. Gold has down here. So gold's breaking on up. We have the right market conditions that are ripe for gold to go higher. This also includes all the other precious metals outside of palladium. It includes silver and platinum as well. So the market conditions are ripe because the yield curve's inverting. We've got fear in the market. And if that fear continues, I think that gold could be at the beginning of a launch pad. Now, one thing we want to look at is we want to look at how we can play this. What vehicles can we use to play it? Obviously, it's pretty obvious you can use physical metals for the lowest risk way to play this. Gold, silver, physical platinum. And that's great. It's something that we can use. But another thing we want to look at is what about the gold and silver mining companies? If you look at XAU to gold ratio, what this is this is a ratio of the gold and silver mining companies in relationship to gold. We know that gold is coming into a favorable market condition with that TYX TNX ratio. We also know that gold is cheap to a bunch of other assets. It could be gold to the M2 money supply, gold to stocks, gold to whatever you want to measure it against, real estate. And this is the gold and silver mining companies in relationship to gold. And what I've got here is need to break this line for happiness, the gold and silver mining companies, that is. So we look on the right-hand side, we are moving on up, and we are still below the breakout of that trend line. One thing I want to say, though, is we have higher lows coming up into that trend line. That's the first thing that I usually see before breaking a downtrend, is higher lows. We can also see that we are at a very low level where that green line going across. We're at a very low level in relationship to history. That's the alignment we want to see. So we're looking at that alignment. We're saying, oh my goodness, the gold and silver mining companies are cheap to gold, and gold just broke out in dollar terms to the upside. We also have the right market conditions aligning for all of this to basically break to the upside. So that is perfect. That is absolutely perfect for a potential move to the upside here. Now, another thing that I look at, and I'm going to go all the way down here real quick, is how are these equities performing against other equities? If this alignment is occurring, we should see an outperformance of the ETFs, of the ETF GDX versus other ETFs. So when we look at this, we can look at like GDX versus gold itself. We can obviously see that this thing is trying to put in a bottom here. It's starting to move higher. There it is, starting to move on up. So that's positive when you look at GDX versus gold itself. That's kind of the first thing. Now, we still need to break this longer term trend line. Now, if we can get up here and get up on top of it, we're going to have a long runway ahead of us in terms of valuation runway to move on higher. Now, let's look at some of these other assets. This is GDX versus rare earth metals REMX. And what do we see? We are starting to outperform against REMX. And we were coming off of a very cheap level in 2022. So this looks positive for GDX to continue to outperform REMX, and we have a long valuation runway ahead of us. GDX versus SILJ. Now, SILJ, which is the silver junior mining companies, is extremely cheap over here, guys. I think that we're putting in kind of another shoulder type pattern or whatnot and doing a retest here of this steep trend line. If we can get SILJ to wake up, I think we could see a vast outperformance of silver in relationship, SILJ, silver juniors versus GDX, if it were to wake up. We've got GDX versus URNM. That is also moving higher. So that does look like GDX could outperform uranium even. And that trend is continuing to look like it wants to move higher. And it's at a cheap, low valuation for GDX. GDX versus XOP, it is broken out and it's moving higher. We had a breakout. So let me back all the way out here. We had an original breakout here, a run, and then we had a retest back here. And I always buy the retest, guys, and we're starting to move higher. So I think GDX, given the market conditions, GDX could outperform XOP. We've got GDX versus copper. We are very low, and if the fear enters the market, like we think it is, this could go up a very long way before hitting an overvalued place against COPX. So GDX looks great, and it's performing positively against copper. GDX versus OIH is also a breakout, a retest, and we're moving on higher. So we could also see an outperformance of GDX versus OIH. This is exactly what I want to see in the charts. So GDX is cheap against other assets. GDX is cheap against gold itself. And we have a long valuation runway for GDX to run higher against all these other assets. And it's moving positively in that direction already. We have some momentum behind it. SILJ is another one. SILJ is very cheap, but we haven't seen a positive movement against the physical metal itself. We're still in this downtrend. The positive thing here that I do see, we've got large buying pressure here, small selling pressure. We saw a little bit more large buying pressure through here in 2020, and then we've got small selling pressure. We're waiting for the Green Army to show up, guys. If the Green Army shows up in the silver junior mining companies, I think that could be maybe the best area to be looking at in the stock market, because GDX is cheap to everything else. It's cheap to gold. Gold's cheap to everything else. And SLJ is cheap to GDX. And SILJ is cheap to basically everything. So the silver junior mining companies, I would say, is at a very cheap valuation. We're just waiting for it to turn against some of these other, like it's commodity itself. It needs to turn on up. But we've got positive signals with the buying pressure and selling pressure, and the way that it's moving, that we could do that here at some point. SILJ versus some of these other ones looks positive against energy service. It's breaking to the upside. SILJ against XOP is very low, and we're starting to make a positive run or momentum against XOP, so that's good. SILJ versus URNM, it's broken its downtrend line. It's starting to move higher, so that's good. We've got SILJ versus REMX. Again, we are still very cheap. We haven't broken out yet, but that looks like we could have a long valuation runway ahead of us, and we've got kind of a roundish bottom that's happening. And we've got SILJ versus copper, still very cheap. We're getting the Green Army to show up in here, and hopefully we can start to break and move to the upside. We can also throw a trend line in here, and we're about to basically break through that as well. Breaking through that as well. And then we look at SILJ versus TAN, and that's broken its downtrend, and it'll either go sideways for a little bit before breaking higher, or we're going to break higher in it. What I do like to see is I like to see the big outperformance of the big green candlesticks, the small selling pressure all the way back down to its base, and basically we're just off that base. I think it's an excellent spot to be looking at potential opportunities. So that's what I'm seeing in the markets. That's the setup. And with the market conditions, and I know, let's go back real quick and look at some more market conditions really, really quick here. Market condition, I'm talking about yields and how the yields are moving against each other. I'm really looking at this US 2-year. That's the short end of the curve. If we look at it from a long-term perspective, we have a downtrend line that we have broken. We broke it right here. So we broke it to the upside, and now we're putting in what I consider to be this kind of shoulder, head, shoulder type pattern here. Shoulder, head, shoulder. If this shoulder plays out and we head back lower here and do a retest of the breakout, this is going to be fuel, in my opinion, for gold and silver to take off. And last bull market of commodities has a very similar setup to how we set up today, which is if you look at TYX, TNX, this ratio, and you look at the last bull market here, what we did is we had a very cheap level in 2000. Gold and silver is a buy down here. You buy it, you hold on, and then just ride it through this whole thing. This portion here was the bull market in oil all the way till 2007. And when this starts to come back up, oil can still go up, but you start to get problems in the market. Those problems in the market could be a deleveraging in the housing market, whatever it is. And then in 08, you can see it drop down and then come back up. And this is where that crash happened, is when it was coming back up. The yield curve was uninverting. We have a similar situation where that curve is uninverting today. And I think the setup is in gold and silver and some of those precious metals areas. The mining companies are still very cheap. We haven't broken the downtrend yet. We're still very early. So we've got that alignment just like oil did in 2020. We've got the market conditions coming around favorable for gold. We've got gold breaking to the upside of its pattern against the US dollar. We've got XAU, which is the gold and silver mining companies, cheap against gold itself. Then we look at the like GDX, the ETF versus the other ETFs, and it's starting to outperform all the other ETFs. The money is flowing into GDX over the other sectors. That's about all the information that, well, it's a lot of the information that you can gather to make a positive case for investing in gold and silver, the physical metals and platinum, and the mining companies themselves. With this market condition change, the TYX, TNX, and the uninversion of that curve, the 2-year yield that looks like it could potentially drop, if we get that to move, continue to move in a favorable direction for precious metals, we could see all this unwind. And someone asked me, how can you outperform? It's getting the market conditions right, getting the valuations cheap at the same time, and then having those market conditions change where the money rotates into those cheap, undervalued assets. That's how you make the big money in a shorter period of time. It still does not mean that will happen immediately. You may still have to be patient here. We may go sideways for a little bit longer. We may not. So that's the setup. And if you guys need help with this, definitely check out finding-value.com. I've got a lot of, I would say, we have conservative bets and we have aggressive bets. And you guys can choose whatever you want. I'll just provide the information about the companies, about the technical charts and the setups and stuff. And you guys are going to have to determine which ones you want to do and how you want to weight them and whatnot. I can't give advice. I can't do anything like that. All I can do is provide information about the companies and stuff. I'm not getting paid by any companies. I don't have any affiliations with anything. It's all analysis driven by the charts and the market conditions. So that's what I've got for today. Give me a thumb up for the content, subscribe to the channel. And if you guys are part of the website, I'll see you on Sunday at 5 p.m. Mountain Standard Time. We'll talk a lot about what I'm doing in the markets, what I'm seeing, the setups. We're going to talk individual companies like we normally do, and we can talk a little bit about psychology of being able to hold on, the psychology of looking for the alignments to outperform the market. Finding those alignments, you're going to have to be patient sometimes. But we do have an alignment here, like we just talked about. So we'll see you there. We'll catch you next time. This is Finding Value.